Hello and welcome to the Stock Planner channel. Today we're going to talk about swing trading HPQ for a short-term profit. I think it's gone down. The HP company provides personal computing equipment and printers in the United States and internationally. It's a very big company, old company. HP is currently undervalued by 35%. That bodes well for a long. They always look for undervalued and growing. However, earnings are expected to decline, not grow, over the next 3 years. That bodes well for a short. And I'll show you a chart that seems to indicate this. And this company is surely to face headwinds with the slowing economy, recession, inflation. I think HP will be going down. How can I play this to make some money? I'll share that with you in the rest of this video. But before I do, I want to tell you that the Stock Planner channel is an education channel. We share our ideas. We learn from each other. We do our own due diligence, and we win. And don't forget to subscribe and like this video, and check out my free Discord where other trade ideas exist. So we're looking at the stock HPQ. It's a technology company, computer hardware. The target price is $37. Currently trading at $33. 37 is way up here. Now, I'm a swing trader, and I look for reversals. There's the top, bottom, top. This is a zigzag indicator. It's not an indicator because it looks to future data and repaints itself. That's why it's always perfect, because it repaints itself and makes itself perfect. But I use it to determine whether some of my other indicators are good. Now we're approaching earnings on HPQ, and that's an issue. The RSI, that's this one here, it's been in the overbought and came back around. The MACD, that's this one, is above the zero line, and this is the stochastics, and that's above the 80 and come back around. When they all occur about the same time, that's when we look for a short, and that seems to have happened. We're 2 or 3 days late, but I did get this signal earlier as well. But this signal is, I think still valid. If you're looking at this stock 3 months out, earnings is not going to really matter much. So I'm willing to take a chance on that. A lot of people say don't trade during or around earnings. I think we need to know more about this stock. Let's do some fundamental analysis. What we did was the preliminary steps for technical analysis using some indicators and the daily time frame. I'm looking at HP using Simply Wall Street, and I like it because it's graphical. And a lot of this tool is free. Try it out. But you can look at the snowflake. It's called a snowflake. And you can see that this stock is probably undervalued because the snowflake is filled up that way. It pays a dividend, and it has great past history. Yeah, it's a good, solid company. It's been around for a long time, but it's aged a bit. Judging by the snowflake, the future doesn't look so bright, and it's fairly healthy. The future doesn't look so bright. Well, that usually has to do with revenue and earnings, and earnings are forecast to decline by 12%. That's not good over the next 3 years. That bodes well for my short. It's trading at 35% below our estimate of fair value, so it's undervalued. We like undervalued, but we want them undervalued and growing. That's what Warren Buffett likes too, undervalued and growing. And this is not one. And negative shareholders' equity. Negative shareholders' equity might be a term that you're not quite familiar with. Shareholders' equity represents a company's net worth, the book value, and measures the company's financial health. In total liabilities, if the total liabilities are greater than the total assets, the company will have a negative shareholders' equity. It owes more than it owns. Dell, Hewlett-Packard, Seagate are the competitors. And you can see it, a lot of consolidation right here between the first part of the year and June or July. June drop, and it seems like it's trying to come back. The price, according to this Seeking Alpha article, is at fair value, but this could be some bad times for Hewlett-Packard. The printing industry is on a decline. The need for paper products is declining. Even I, an older trader and investor, am going pretty much paperless. I'm very seldom using my printer anymore. Here's HPQ along with its peers, and HPQ is not overpriced. This is future growth. That's going the wrong way. And here's earnings, and that was revenue, earnings, they're not going in the right direction. At least in the other years, it was going slightly upward. This is past performance. So if you're a negative person, and I'm negative right now on technology for the next 2 years because I think we're going to have an economic slowdown, this is not going to look good. Forecasted annual earnings growth negative. Using a free tool called Options AI, I'm looking at the expected value or the expected move. HP currently trading at 33. Looking 3 months out, it says the expected move 3 months out is around 12.5. And 1 month, which is showing here in the chart, is 8.4. And that's if you're negative. Expected move goes both ways. You don't know which way it's going to go. All the options are telling us it's based on people buying and selling an option, thinking there's always going to be a buyer and a short and a seller. So one's going to be right. And based on where they're buying them and the volatility and a few other factors, they're saying that this is going to affect the move in the next 3 months. It's going to be one way or the other, 12.5. So putting that data into the spreadsheet, 90 days out, it says a high strike. If it does move one way or the other, based on that percentage, a high strike of this stock will be $37. $37. And a low strike is $29. Now, you have to decide, based on your indicators, which way is this going to go, up or down? There's earnings in the next few days. Is it going to be good earnings or bad earnings? I don't think it's going to be bad, but the RSI is below the 30, but just a few days ago, it was above the 70. And that's where we got this down. And I think we have more downside, okay? But this indicator says, hey, maybe it'll swing back up again. The other ones, the MACD is above the zero line, so that's we don't take a trade like that. To take a long, the MACD must be below the zero line, and the stochastic must come around, and then all of them have to occur within 3 or 4 bars of each other. That's not occurring yet, but it could. But if this does move that 12%, and you invested $1,000, you'd have $125 in your pocket in 3 months. 3 months on $1,000 invested is 12.5. Of course, that's expected move. It's not rocket scientist on that. But if you did 4 of those trades a year, that's 50%, and that's sweet. Slow, consistent profits. And you can do more with options. Using a bear call spread or a broken wing butterfly will yield more money with less risk. You can check out my Discord chat for other ideas like that. So please leave in the comments whether you're going to go short or go long and what you think of this trade. By the way, that free Discord chat, there is a trending chart out there with over 350 stocks telling you which way this algo is saying the trend is, and also the indicators. Which indicators are saying buy and short? The RSI's out there, the MACD, and the stochastics. And for the price of a cup of coffee, I have an algo that shows when all 3 of them occur at the same time, which gives a stronger signal, with entries, when to scale in, when to exit, and the profits. That's a paid level for the price of a cup of coffee. And also remember to subscribe to this channel. HP, I think it's going short. Do your own due diligence. Learn how to trade. Learn your strategy. Keep it simple. And win. Happy trading.